Did you watch the stand-up comedy show that premiered last night? The one called the State of the Union Address. If you missed it, don't worry. You missed nothing, other than probably breaking your television. Anyways, let's get into this market. Have you heard the saying, when there's blood in the street, buy land? Well, for those who don't know, it means invest in real estate when you see war. Same thing goes for the stock market. Unless, of course, it is that cataclysmic crash everyone talks about. Bet you heard a ton of people say, the market is going to crash this year. They're wrong. They were wrong last year and the year before. They have been wrong for over a decade now. Recall March 2020? Everyone said it was the greatest market crash of our lifetime playing out before our eyes. They pointed to the facts. The world had been shut down. Think about that. They shut down the whole world. Yet this market shot right back up to more record highs in mere weeks. If shutting down economic activity in the entire world could not bring this market to its knees, what makes you think the market is crashing now? Only one thing will break this market, and we will get into it later. For now, you should be going long. People argue that the reason the market didn't crash in 2020 was because of the Fed pumping money into it. Well, yes. So? And they say that is about to end. Hence, the market is about to take a hit. These folks fail to realize that what the Fed says is totally different from what the Fed does. If you doubt us, do your own research. Right after watching this video, get on your computer. Get on the Fed's website, check out their balance sheet, and you will see there has been no bleep in their balance sheet. The word taper was thrown around like a game, just like the present game of rising interest rates. Mark our words. If interest rates go up, it would be a fraction of yet another fraction. And you won't have interest rates going up parabolic as they ought to if the Fed was serious about fighting inflation. They are not. They want inflation. Inflation makes us all weaker as a people who trade in their product, the fiat currency. When we are weaker, then we need them to bail us out. The weaker we are, the stronger they get. If it were you, would you want to lose such power? Of course not. Hence, the Fed has no intention of fighting inflation. This is all part of the plan. Even the current war going on right now. Innocent people are being slaughtered for the plan to go on as intended. The war offers a great excuse for them to keep creating debt upon debt. We are so deep into debt as a world that should they pull the plug right now, or even as far back as the last '08 recession, everything would come crumbling down. Those in power know this. If you don't, that's why, at the State of the Union address last night, the president talked about everything but not the fact that the excessive money printing by the Fed is killing our economy. Understanding this economic dynamic helps us understand the way this market functions. The stock market we have today is not built on the fundamentals of the past. Hence, you have something like a war going on, and the stock market rallies. And if it gets any type of good news, of course, it has a better excuse to rally even further. On the news, what do we have today? ADP reports that over 400,000 jobs were created in February. It beats what the economists at the Dow estimated. In fact, they revised the abysmal numbers of January. Hence, they say that rather than saying there was a loss of 301,000 jobs in January, the actual number was a gain of 509,000 jobs. You can't make this crap up. I mean, how do you get figures so wrong in the first place? Anyways, that has nothing to do with us. All we are concerned with is how does this affect the market? If the market could find a way to rally right after Russia started dropping bombs on Ukraine, what do you think the stock market would do right now? On the back of this somewhat good news, of course, every hedge fund manager would come out on the mainstream media to tell us how great we are recovering. No one will talk about the fact that we continue to have rising numbers of first-time unemployment applications. You are not supposed to know that. Who cares? Hence, this is a signal that the Fed will use this news as an excuse to pump in more money into the market. And, dear friends, the stock market rally just began. If you miss it, you have yourself to blame. And note the timing too. Right after the State of the Union address. Of course, the power brokers must find a way to get the market rallying right after the speech of the US president. Anything other than that would be an embarrassment. It's all rigged, people, right before our eyes. We don't care. They can keep rigging it. They can rig it for another year or another 10 years. We don't care. In fact, perhaps we should wish that they keep rigging it, so we find more opportunities for ourselves. Truth is, we can't do anything about what they do. Our only ability lies in how we respond to it. Hence, what is important is that we partake of the gains. And partake, you should. This is not financial advice. But this is a deep you should be buying. You should get into anything you can right now. Bitcoin and other cryptocurrencies are set to go higher. The futures market is going to head higher. Today is not going to be a red day. There could be a couple volatile moves here and there. But overall, we don't see a red flag. The 10-year yield is having an upswing. Hence, though the Dixie is relatively higher today, it should start tapering off pretty soon, especially on the back of a booming stock market. Also, an important point worth noting, Fed Chair Jerome Powell, or as we like to call him behind the studio, our dear Uncle Jerome. Uncle Jerome has come out to say that rate hikes are still coming. That is to appease the markets. Those who know understand that the rate hikes will be so insignificant to inflation that they would be useless. However, investors need to hear the Fed promise to make an attempt to control inflation, though we know they have no control over it. You see, the system is based on debt, and debt practically works on some level of trust. Trusting mere words. It's like doing a transaction with a buddy and accepting it when he says he will pay you later. Truth is, he may not have that intent. That's how it is here. Hence, the promise of coming interest rates is to signal to the markets that the Fed is working, though they are not. And that comment will push the markets high, much higher. If you would like to see more about the stories we referred to in this episode, please check the link below. We will be sure to include everything down there. As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every US market day, so please be at liberty to check out our other videos. It really means a lot to us. Thank you.